I looked at my own mistakes that I made with my own mortgage, getting focused on just the rates, not thinking about the future. I took a private loan, a second mortgage, that the only exit was to sell my house with no appraisal and no explanation. I thought to myself, man, the process is so disjointed. There's no education.
Hi, everybody, and welcome to Smarter Money. My name is Vlad Sherbatov, and on the show today, we have a mortgage industry veteran. He is the principal broker and president at Nuborrow, which is a mortgage brokerage based out of Toronto, Ontario. Please welcome Adam Ross.
Hey, thanks for having me. A veteran. I guess you just aged me.
Adam, these days, it doesn't take a long time to become a veteran if you work long enough on a particular topic. But in your case, I think that's a true statement, isn't it?
Yeah, I mean, Nuborrow has been around for 8 years, but I've been in the finance industry probably 20, 25 years in various positions and industries, crossover from auto loans as well, which share a lot of similarities. So this was a natural fit for me when I did transition over.
Can you give us a quick zoom through that career path and what brought you to your current position of leading Nuborrow?
At heart, I grew up in the car business. My father had been in the industry for 30 plus years. And as much as I resisted sales and client care and how to deal with customers and meet needs as a kid at the dinner table, osmosisly, it went into my head. And I tell the staff a story that when I wanted to play pool with my father as a child, and he listened to sales tapes and those type of trainings on his own to get better. And that was one of the rules in the house. If you wanted to play pool, that's what was on. And I think that was a great teaching tool, something that I get to spend time with my father and play pool or do something and still listen to those tapes. So it's always been in my blood. And when I started in radio and television broadcasting, and as I progressed, I was working at 680 News. My father got an opportunity for an auto dealership, and I was working part-time in radio and doing the dealership. And I fell in love with sales as much as I resisted it most of my life. I realized everything is sales. I was selling myself to the radio station to sell advertising. I mean, so it was just a natural fit, and it grew from there. Where after those dealerships, I worked for other dealerships, and I had a leasing company at that time, and I just wasn't in love. I hate cars. I still hate cars to this day. I don't like the purchase experience, and I didn't love the business. And the transition, I was in another industry. I met some gentlemen in the mortgage world, and I really fell in love with it. I wanted to get into real estate at that time, and I was studying for my real estate license, and I fell into the brokerage. And as soon as I got into the brokerage, I realized how broken the process was, just like it's still, it has its problems in the car business, and how it wasn't meeting the client's needs. And kind of Nuborrow exploded from there. I met with my partner, and we ended up venturing out on our own, and that's how we got here today. 8 years ago, in October, we banded together and I looked at my own mistakes that I made with my own mortgage, getting focused on just the rates, not thinking about the future. I took a private loan, a second mortgage, that the only exit was to sell my house with no appraisal and no explanation. I thought to myself, man, the process is so disjointed. There's no education. And you're talking about, at that time, houses at 400,000. Now they're at 800, $1 million. These are big decisions that people are making, and there needs to be a better education component. Someone needs to walk them down the path of why it makes sense today, maybe to not take the lowest rate. So that's kind of how we got here today.
And was that the piece that you felt was the broken piece that needed fixing? Is the more clarity of information to help people make the better decision for them?
Yeah, right now, if you were to ask me what makes Nuborrow different, we focus solely on education. You've got AI, you've got FinCom, you've got all these things that are promising they'll do a mortgage for you and it's faster and easier. But the human component, the mistakes you can make by taking the lowest rate, but not telling me that you plan on switching jobs in 3 years. and now you want to redo your mortgage and there's a big interest adjustment penalty, and you'll ask me why, why didn't I mention that? That's the stuff we focus on and the mistakes I made. So I joke with the staff all the time. I'm not the president. I'm not the principal broker. I'm a member. Okay. We constructed this company on the mistakes that I made and a lack of education that's actually out there. You can use the equity and the power of equity to improve your financial situation and actually, get the products that you need later on if you've got a right plan in place. So there's very little planning. I make that a broad statement. There are brokerages outside of ours that do that as well, focus on planning and education. But those are the top percent of the people in the industry that are making changes and teaching clients what to do with equity.
When I look around Nuborrow and I take a look at your brand and your website, if I were to describe it in a word, I would say it feels approachable. Because when you look at a mortgage transaction, similar to buying a home and getting financing, they go hand in hand. It's so overwhelming. And I'm speaking with personal experience as well. I recently took out a mortgage within the past year, actually. And myself being a business owner, self-employed, it has its own set of extra elements to consider, right? And I absolutely had that same issue where I was just starving for clarity. Like it seems to be there's an abundance of information out there, and yet there is such a lack of clarity.
That's so true. Even in my own mortgage, I'm also business for self. I'm in the business. The microscope on me is a lot larger because I might be manipulating the system. I have to get another brokerage to help me facilitate my own mortgage, and I don't qualify for the best rates. I have to look at the products that make the most sense and use my education and think about planning and what I need to do. And that conversation, Vlad, is not had enough. Even today, we're very busy right now with what's happening in the market, and we're inundated with calls. Solely the first 5 seconds of the conversation is what's the lowest rate. And I teach everybody here, and I do it for myself. I'm not in the lowest rate product. It's not about rate. It's about what are you doing? What's the why behind the mortgage move? What's your next 3 years look like? What's your next 5 years look like? And often I say this with all due, we did a mortgage just a little while ago for an investment property. My wife was on title and she went to sign at the bank, and I gave her a list of questions. I want you to ask these questions and I want to hear the answer. And she came out. I said, "Well, honey, tell me, I want to know, feed me. What did they tell you?" She's like, they didn't answer those questions. And that's not every bank, and that's not every mortgage brokerage. It's just, you're right. When I'm writing stuff for our website, I'm writing a piece, I'm preaching how important it is for your own as a consumer, to pick somebody who will guide you, be a really good guide and give you those answers and give you the clarity that you need and look out for you and say, "Vlad, in 2 years from now, you're planning on having a baby. That's amazing. Have you thought about what that might change to the size of your condo, or will you want to move?" And instead, people are lowest rate, 5-year fix. They follow the bank's plan. The lowest rate is a 5-year fix for a reason. It's their plan. It comes with if your life has any changes, it comes with an interest adjustment penalty. And those are the things we educate and talk about all the time, and try and open clients' minds as to what's your best next move with your equity and your mortgage.
That makes so much sense. And you mentioned that you're very busy right now with what's happening in the market. And let's talk a little bit about what is happening in the market, because when I open up my browser on almost every day, I see a new article that talks about record prices, record sales volumes, lowest interest rates. I mean, I'm getting a little bit of a deja vu of like 2008, 2009, when the mortgage rates really went down and everybody rushed to the market as well. From an inside view, from your company, what is your take on the real estate market right now?
Well, it's going to go in 2 directions. Number one, this is the best time to be a borrower. There's times to be a saver. There's times to be a borrower. This is the best time to borrow. Rates are low. You're in the sweet spot where prices have gone up and you maybe have paid down your mortgage and you're looking to refinance. And this is the best time to borrow at 1.69, 1.9, whatever the case may be, because you're using equity in the market that you haven't necessarily done anything to earn. It's just there because the market's going so crazy, and it's the best time to borrow and look at strategies. If you can get money at 1.8 and pay off credit cards at 19.9, it's a no-brainer. Now, the flip side is if you're a purchaser right now, you've got to be really cautious about what you're doing. We're seeing a lot of traffic of purchases, purchase offers coming in where they've waived all conditions. They're under the gun to get financing, and they haven't thought ahead about what that means. You know, their deposits at risk. They may have overpaid for the property. Look, in 2018, I knowingly got into the market and overpaid. And I remember telling my realtor at the time, who was a good realtor, and cautioned me, you know, you're overpaying. I was saving an hour commute. So what that was worth to me in time, I was willing to overpay. And I've only seen an increase in my own property value just now with what's happening. So you have some trade-offs that you have to consider when you're purchasing, but I am really cautious on the market right now. And I'm not negative at all. It's just buyers need to be aware of, there's apps that show you the property history and what it was sold for last year and what's happening in the market before you just jump and waive all your conditions and buy a house because you want to be in the market. You got to be selective. There's another house, inventory's low, prices are high, and you could really, I feel, we talk about it here. I don't want to see clients like I saw in 2000, at the end of 2018, left holding the bag, because there's this domino effect in the industry. It takes one purchaser to not get approved, to back out and be willing to lose their deposit, for it all to start following like dominoes. The next person can't move, can't sell their house. And then you've got this big backlog, and then you've got a price freeze, and then you've got mortgage rates going up. We're doing this dance right now that is exciting, and you can get caught up in being the best bid or the best deal, but it can end up being very, very painful if you're not dealing with the right mortgage broker, knowing what you're doing with your products, and justifying that cost at the end. So I love the market. I love what's happening. I don't focus on a lot on purchase business, to be honest. We do a lot of refi and a lot of home equity lines and loans. So we're also using that. We're showing clients how to use the advantage you have right now with that massive swell in equity. But when we do purchases, we're teaching the staff here to make sure that our clients understand that waiving a home inspection, what that could cost, what that looks like, and being very careful to not be caught up in that hysteria right now just to own a house.
So it's a good time to borrow, but you have to be cautious and have that good long-term outlook. And I think it's an important distinction to make, that even though this is the best time to borrow, it doesn't necessarily mean to borrow to buy a new home. Like, you can borrow for a product like a home equity loan, or where you already are a homeowner and your home equity is just greater now because of what's happening in the market, so you can leverage it to a greater capacity. Am I right with this?
Yeah, that's a great point. Let's go back 10 years. The home equity loan, the home equity line of credit wasn't necessarily a boutique or a focus like it is now for many of us. It's kind of gone corporate, where home equity loans are now you can get them as low as 5.9, not the traditional 15.9 and all the extra, misinformation that went with them. Now there's transparency, there's lower rates. At Nuborrow, we're talking about how you get out of it. Nobody, when I signed my mortgage, told me how to get out of it and to figure it out myself. So yes, it is a really good time to be a borrower and take advantage of even low home equity loans or lines of credit rates, and tackle 19.9, 15.9. Your friendly neighborhood bank credit card is still at 19.9 with a lot of the air miles and a lot of the bonus, trappings that come with it. But why not take advantage of your equity right now? Because your neighbor's house sold for $125,000 more than you expected. You're sitting on that equity, and you could actually leverage the market, pay off your credit card debt, boost your credit score, and look at refinancing in another short-term pocket when your mortgage is up for renewal, and still do it again. We're teaching clients right now, this is a good time to be a borrower. Why not take the money out, especially if we're doing a new first mortgage at 1.9 or 1.89, and invest that money? Where else are you going to get that money from the equity in your house at 2%? Put it in the market for 5 years and try and make some extra money on it. Become an investor in real estate, just using your own home and the equity. So there are a lot of really exciting things right now that you can do with the equity. If you're working with someone who can teach you and walk you through those steps, that you can really save money, which is super important right now. It's what's going on with COVID, to lower your interest rates altogether across the board. And in 1 year, not a long-term strategy. In 1 year, you could borrow that money, boost your credit score, and put yourself in a much better position than you are today.
And are you actually able to work with your customers to lay those plans or options out for them that go beyond just how your product works, but actually what are different options that they can leverage it in that time span?
Yeah, Vlad, we don't do a single mortgage loan, first mortgage, second mortgage, home equity loan, line of credit, without a 3-year plan. So every one of our clients we develop a custom plan that saves them money, lowers their interest rate, and shows them in year 1, this is what we're going to accomplish. In year 2, this is what we need to do. And in year 3, this is how you're going to graduate and move on through the system. I have a full-time client care team that works with the client through the whole term of the loan, because today's education is great. And you might get it from the brokerage and the broker and move on. But what happens in year 2 if programs change? We employ a whole team of people that literally are work on your renewal and what you should be doing and checking in on you to say, hey, the things changed. And our plan was to, accomplish a lower rate with your increased credit score. But equity's gone up and we didn't pay off a debt last time. Maybe this time we look at tackling that and further enhancing your credit score. So yes, we make sure that is one thing here that's certain, is planning and education is everything, and that you have a actual roadmap on how to work with the product that you have. And always, in the end, is saving money and getting better rates.
I feel like this move towards more informative decisions and more education and more context around these financial moves has actually expanded the role of the modern mortgage broker and the value that a mortgage broker provides to a market where a lot of the buzzwords are around automation and AI and speed and efficiency and tech. What do you think about this?
You couldn't have hit it any more, the nail on the head. I love FinCom and AI, and we're about to launch a mobile app, but I didn't do it with just the standard, here's a rate calculator. I took it from what we do now and how can we turn that into an app to be more helpful to the client. And you're so right. COVID has taught us that we could all be working from home. We could all be doing stuff over Zoom like we are now, and we could lose the human connection if you're not a good communicator. And AI just won't replace some of those things. Yeah, it'll give you an idea of a rate. But imagine this. Imagine that you don't qualify for the rate that you feel you should, or that you think you do, or that you want, and AI spits out a rate much higher than you anticipated. Where does that client go for the explanation, for the help? And what's really going to be in the next 2 years, 5 years, the really big change is going to be those who embrace the tools now, because COVID has made changes that the bank has jumped 5 years ahead. Well, now they'll accept digital documents instead of wet signatures and paper documents. Law firms are doing Zoom calls to complete the documents and accepting digital. These were not done before COVID. Right. So as we increase those tools, it's going to be the brokerage or the agents out there that can embrace those tools, but still understand how important it is, the guiding or the, walking a client through why they're in the situation they're in and how to best use the situation to their advantage. That's going to trump AI. AI is great. It's fancy. I drive these guys and girls nuts with new tools and new things that we're doing. Yeah. But I'm still so focused on the human connection and the why and the story behind what's happening, because AI will never get to that level.
And what are the main trends that you're seeing in the mortgage industry that are coming in that are really changing the way that both the end consumers are interacting with these transactions and the industry players as well, like the mortgage brokers that are coming into the game, or even existing ones that have to redefine how they do business, and the mortgage brokerages? Like, what is your philosophy to manage your team to stay ahead of the curve in the marketplace?
Well, that's a great question, because before COVID, it would have been a totally different answer, I think, where most people would assume that everybody is on the FinCom bandwagon and plowing ahead to make it robotic. I'm completely different mindset. Products were put in front of me all the time. I would say that's not who's going to ultimately gain the client's confidence. So our philosophy here hasn't changed since the day we started. We're still very education focused. And I'm seeing that trend with other larger brokerages. The ones who are rising to the top right now are offering more products, more education, and less FinCom. Yes, you've got online apps and things that make it easier and you can share documents. That's great, but it's still here anyway. That's still major focus. And I think the trend that is going to be a game changer is going to be how you use those tools for a human connection. And I'll give you an example. If we just pressed forward with Zoom meetings and electronic documents, or just skipped Zoom altogether, as it's commonplace right now, and sent out documents and made a quick phone call and said, go ahead and sign these documents, your success rate would be much lower. And once COVID or post-COVID, and we get to that new normal, whatever that's going to look like, if you're going to have to be a really good communicator and really focused on education. And that will be the trend, I think, that you'll see grow. More customer service, more customer facing, more transparency than, apply online and get an answer in 30 seconds. It's just the way I feel it's going.
And I think even for new mortgage brokers coming into the game, because consumers have more access to information, in part because companies and mortgage providers are providing more information to them as well, that as an end consumer, if you're dealing with a mortgage broker, you are starting to expect a little bit more of that transparency, right? Of that personal communication, as opposed to just selling a product. And in some cases, from some mortgage brokers, being extra aggressive with putting you into a product.
A great point, a teaching point here that we use all the time. And when I'm listening, I'm having communications with agents, I'll point it out and say to them, stop, you're selling the client something. It's not what we're doing here. You need to be able to teach the client and guide the client towards the solution. That's all we provide, is the solutions that fit their needs. Don't sell them something because you think it's the good product. You might be butting heads, and the education that they have at their fingertips is frightening in some cases, because each brokerage or each place that they go for that information can be slightly different than the next. There's no uniform train of thought. So you have to be really, really mindful that the consumer, and that's what's changed the business as well, is that the internet has allowed brokerages to put more education online, and it's allowed consumers to self-educate. And then it's a matter of, perception on that education and trying to get on the same page as how whatever they appear or whatever they've taken in, and how they're going to break that down and then give it back to you, and how we're taking that information and how we kind of meet in the middle. But I love the fact that the consumer has more information, because again, I go back to when I started this company and the mistakes I made, that wasn't there. I signed a home equity loan with no explanation. Mm-hmm. So I welcome those type of changes. And the brokerages and the agents and the people that embrace that and are willing to offer those education services are the ones that our consumers are going to choose.
And ultimately, that's what drives sales too, because as you probably listen to some of these old sales tapes, and I've read a few sales books myself, but it's not so much about telling people what they need and outlining all the benefits and why they need a particular product. It's about guiding them to come to that conclusion on their own, and that's what actually resonates with them. So really, less selling and more teaching sounds to me like the right way to go here.
It's honestly the only way we've been successful in the last 4 years, because again, our industry is on a whole is this is the lowest rate, this is the next product. And the consumer will see that as well. There's many sites that just are focused just on whatever today's rate is. And even if there is conditions apply, not everybody is fully aware of the steps they may need to qualify for that. And sometimes in this position, to be honest with you, Vlad, that education component, when you're the one delivering it, is not always the best news. And it's not necessarily what the client wants to hear. Mm-hmm. But we'd be doing a disservice if we just pressed on pretending that that the mortgage world works differently, or the qualifications work differently than they do. So I am big on training our team to make sure that upfront we're not talking about products, we're talking about education, the wants, the needs, and how we can look at the solutions or the situation the client's in, and then pick and choose which products work the best.
Adam, how does leading a team of mortgage experts as a president at your company compare to leading a team of kids in a sport as a youth football coach?
Well, I love the X's and O's of football. I love the planning that goes into that. Even at a level of 8 and 10-year-olds, I was told by my organization that my playbook was a little too complicated. But I take that I'm a natural coach at heart. I coached high school basketball. I played college basketball. So I take those lessons of coaching and I tell them all the time, I'm not your boss. I'm not your president. I am your coach. If you need a personal conversation and what I can help or offer on that side, on that front, I'm willing to do that. And those are, to me, the leaders I responded to. Mm-hmm. So I try and emulate the leaders that I responded well to as an athlete or as a young someone just getting out in business. And there's so much similarities between running a company and being a coach. There's many books on it. I've read quite a few that, it's right in line with how I think is what are your motivations. Each person's motivated differently. It's not always monetary. Sometimes it's emotionally. There are things that you learn about people as a leader, and then I'm constantly making adjustments, much like a coach. You're looking at what we did last month, or we're looking at what we did last quarter, and who's it working for and who's it isn't working for, and what processes can I modify slightly for somebody else. It's just not that process isn't working. And one of the big takeaways as a leader from seminars or books that I've looked at is that a rigid coach or leader loses an audience. And so I am always open to change and conversations. I might still keep that process, but I might make a small modification. And that's kind of how I approach every day. I love coming here and talking to the team and working with them, and new agents coming on board. I'm really excited as they get started and watch their education level grow. We take a lot of people new to the business, and I love that opportunity to educate them and show them things that they haven't even thought of before, why a mortgage can work one way versus the traditional way that they thought. So coaching is, anyone starting out who wanted to run a company one day coaching is not only giving back to kids or community, but you're learning so much about how information can be relayed, misunderstood, right? Especially in football and those type of processes. So it's a natural fit for me.
And I think especially when you're dealing with youth, and I have almost a 4-year-old daughter, right? And she challenges my communication skills on a daily basis, because the way that I communicate with my friends or my wife or my colleagues, it just doesn't work with her. And, I'll try to explain something to her, but then I can see that it's just not coming through. And it challenges me to think back and say, all right, she's smart enough to understand things. I just need to figure out a different way to communicate with her, right? And if you have a group of those people, you can get some really transferable skills from that, I'm sure. But
I have 6. I got the gray hair to prove it. Your skin. So each one of my 6 takes communication and takes coaching and takes the instructions and breaks them down differently. And very rarely, I say to my wife, there is very rarely a time where all 6 are marching to the same beat. That's just the way it goes.
Adam, when you do have a new mortgage broker that joins your firm, what do you tell them on that first day just to give them some fundamental basis in their mind to get their career off to the right path? What advice or piece of information would you offer them?
I think this will be a shock to you, but I tell them that everything they've thought about or they thought they knew about the mortgage industry, I want them to forget it. And I want them to make meaningful connections on the phone. That's their only role for the first little while that they're here and they're licensed. Well, we do daily training here every day now. We really, really let them be themselves. I don't give scripts. I don't believe in that type of stuff. I believe on you being able to pick up the phone and being able to communicate with somebody and figure out how you can help them. So I don't put a lot of textbooks or education or videos or mandatory things they need to watch. We are very, very patient, and we want to find somebody who wants to have conversations and wants to help. If you have the ability to talk and listen to somebody, we teach a lot about how to listen effectively, and get the information and build a conversation in a relationship. That's the AI. That's the computer spits out the mortgage rates and the TDS, GDS. It's the story that you have to be good at. You have to be a good communicator in this business. And that's going to be more and more evident as we continue to press forward in this industry.
And ultimately, as consumers, we make decisions with our hearts, right? With our emotions. And we justify it with rational explanations like the terms of the mortgage and the rates sometimes and things like that. So I love the no scripts idea. I think that's so novel, and I rarely hear that approach. I think we live in a very script-like world a lot of times, and where people like to vilify mistakes and like not have that room for open dialogue sometimes at some imaginative risks that maybe come with it. But I love the idea of no scripts and just letting your guard down. And while you can still have objectives and goals and things that you strive towards, but you have a much more open mind in how you go about them to get to those objectives. So I really like that point of view. Adam, is there like a misconception about the mortgage industry or maybe the mortgage broker profession that you face regularly from people that is just not true, or you would like to clarify or debunk?
Yeah, I think from the client's perspective, a lot of times they are quick to trust their bank without ever exploring the opportunity that's out there. And what I mean by that is, if you take a step back and you look at the big 6 Canadian banks, I get why you trust them. That's how you were raised most of the time. But if you looked at earning reports, you would see that they're a business, just like you might look at a mortgage brokerage. And what you're missing, or the misconception, is that everything has a cost if you deal with a mortgage broker. We at Nuborrow, we have a no fee guarantee. If you're refinancing and you go through any of our bank partners, there's no extra costs. There's no extra savings by automatically signing a renewal offer at your bank without ever taking the opportunity to talk to a broker. Conversations don't cost money. We're free to pick our brains and take a look at what else is out there in the market. A off bank or an off brand bank that's smaller might have a much better rate or a better program that fits your needs as a business person. So I think the misconception is that the bank is the only place to go still to this day. We're a very small part of the mortgage business, and that I never understand. Even if you automatically qualify for the greatest product at your particular bank, it would be a mistake to not at least explore what it would look like if you went to another bank, if you used a broker to open a door to a product that you've never considered, where maybe you're getting now a Manulife type product where you have a mortgage and a line of credit, and while you pay down your mortgage, you're having a bigger line of credit. There's so many things out there other than just your bank mortgage. And I think a lot of times people automatically assume a broker is working in the middle, needs to be paid. And while there are costs of borrowing in certain situations, absolutely, there are lots of us out there that have no fee services just in an effort to show you what you qualify for.
You mentioned in the past that you offered your wife a list of questions to ask when she was having a conversation about mortgages. For somebody who is having a conversation about a mortgage, maybe it's a new one, maybe it's a refinancing or home equity, what are the main questions that somebody should be asking before they make that decision?
My favorite and least asked question is, what happens if I have to break it? It is a huge profit center for banks and interest adjustment penalties. And what happens is we sign these 5-year fixed. We don't ask any questions. Mm-hmm. What's the exit penalty? If I had to change my mortgage in 3 years, can I? If I do, could you calculate the penalty ahead of time for me? So before I sign it, I know. These are things that we press our team here to make sure that you're giving the complete picture. And a lot of times that's just not done. And it's not necessarily a fault of the bank. It's the fault of the consumer who doesn't know enough to ask, and the education hasn't been there yet. And we expect, I think, sometimes the big banks to be the knight in shining armor and educate and answer those questions. And often they don't, because we're doing a rate focus, we're pressing forward. You should also ask your bank or your broker, is this mortgage going to be a collateral charge? I cannot tell you how many times we run into a situation where the client owes far less on their mortgage balance, and we pull title, we get ready to do something, and we have to inform them that there's a larger collateral charge on the property. And a collateral charge just means that the bank may have, you might have bought a house for $500, they've registered for $600, that's the collateral charge, and that's how much the equity spread that they own. And they might have done that to offer you another product or a line of credit, and that's not necessarily a bad thing, but not knowing that there's a collateral charge and being sort of tied to that mortgage and that institution, that's something that clients don't ask enough. I mean, there are products that we can actually check a box and register just for the amount of the mortgage and not allow a collateral charge. So those are probably my two biggest that aren't asked enough. Myself, that mortgage that I was talking about with my wife, we took it and it was a collateral charge. So, I mean, those are two of the biggest red flags for me when you're dealing with, a sign and drive situation where you're just taking the rate and moving on.
When I talk to people about mortgages, just, my friends and just people that I know, I get a sense that when people go about their decision making about who to go with or who to even reach out to get started, I've heard before, but correct me if this is wrong, but there is a little bit of a tendency to think that if my credit is really good, then I just need to go to my bank and basically that's just the solution for me. If my credit is not so good, I need to go to a mortgage broker because they will find me a different lender, but I will have to pay a much higher interest rate. How much truth or non-truth is there to this type of thinking?
I think we debunk that myth every single day, just simply because 700, 800 credit score. We've looked at renewal offers that were right now, still at the 2.29. And we do some quick calculations and look at TDS and GDS. And just from that phone call, say, yeah, we can qualify for 1.89 right now. So that's a big misconception, right? If you have no major life events and your credit score is good and you've been at your job for a long time, or you make good income, you just assume that the bank is going to step up and be able to offer you the very best product. That's a big misconception. There are times where you may qualify for something that you've never, ever considered. On the flip side, when you feel like maybe you have some credit challenges, you've had some life events, something that's maybe you think has damaged your credit, or you've changed jobs recently and you may not qualify, or your bank tells you no, and now you feel like hat in hand, you have to go to a mortgage broker and it's going to be so expensive. That's not true either. We're doing some great things right now, still at 1.89 and 1.9 for people who weren't able to qualify, they thought, at their own bank, just by simply getting the story behind it and taking a look at the credit bureau. The education that we put into this process here on just the credit bureau, teaching them about utilization, it's 30% of your score, and your credit history is 35. And that's a big part of your score already that we can help you, improve to get that rate, or to put yourself in a better light in front of the next lender. So it's not always more cost because my credit's, not A1 or it's not the best. It's a matter of we might show you some things you can do in 3 months with your credit before you even do a mortgage with us that'll actually help you qualify if you can wait the 3 months. So it's a stigma that many of us have been trying to shed. 8 years ago, I mentioned it, right? We've gone corporate now. We're much more transparent. We're much more friendlier than, or this business is not just us, but this process is a lot more education based and a lot friendlier in terms of, hey, the story is excellent and it doesn't matter what the score is now. Believe it or not, here's some products that are far less interest and far more advantageous to you than you ever imagined. You just have to be willing to make the call and get into a conversation.
So even if you have a fantastic credit score, go into a mortgage broker to explore the full range of your options does not equal a higher interest rate just because you didn't go directly to a bank.
Correct. I think we teach it here as well, that a renewal and a refinance are totally different things. Often you'll be given a renewal from your bank based on how well you paid your mortgage payments or whatever your mortgages come due, and you see the rate and you see one or two options and you sign and never think about it and send it back because it's easy. It's easy on purpose. It's designed for you to continue and keep your business with the bank and keep moving forward. That's a key point, especially now as it's the best time to be a borrower. That's a key opportunity lost, leaving money on the table at a renewal or a refinance to just sign it back. That's when you should be looking around and saying to yourself, the bank's offering me XYZ. It's worth a 20-minute call to someone else and share my situation and see what might be out there. An application has no costs, and see where we fall. It's worth it to shop around.
And isn't it true that when you have an offer on the table from somebody, even if it's your employer or whoever it might be, that's when you have the most leverage? Like, why not take that time to make a few phone calls and say, hey guys, I don't really need anything, but I just got this paper with a mortgage renewal option for me. Just curious if you can do anything else that's a little different that I don't know about.
Right. And there's the key education piece. I don't need anything else. I hear that all the time, when in fact, this is the best time, Vlad, to be a borrower. So if I could get you some extra money out of your house at 1.89, could you not put $20,000, $30,000 somewhere else in a bond, a GIC or something for the 5-year term that you're going to sign for, and take that money and now you become the investor? You don't need it right now, but if I could increase your mortgage slightly and give you 20 grand back, reduce your rate, beat the renewal, and give you money that you could invest, hopefully not on the stock market, but invest it somewhere that would give you a rate of return in over 5 years, whatever you made on that 20 grand, you've made. So I love those calls when I get one from a client who says, I don't need anything. I just want to renew I want you to beat my renewal rate. And we go into the whole, this is the best. You could turn yourself into an investor right now on this call for free. It's a good time to take advantage of it.
That's such a good point. And you're contributing to a greater conversation, which is around financial literacy and just understanding moves, because people think of financial literacy as just for people that don't understand basics about saving and spending money and things like that. But it's much deeper than that. It's these types of decisions that are allowing you to use debt not as a way to just live life, but use it as a tool to get to the next phase, to invest for the future, to accumulate wealth. And there are people that make 6-figure salaries that just don't have that information because, we don't really get it in conventional schools or universities. And we rely on self-education to obtain it. And increasingly so, we rely on service providers and companies that are taking that step to share their expertise in an easy to understand way, to educate people about the successful people, about financial options, to put them in a position to make those smarter financial decisions. So I really love that you guys are doing that.
That has been a big shift during COVID. As soon as the rates started to go down and the equity started to go up, we were inundated with phone calls of that very almost word for word where I don't need anything. And the team and I were beating our head against the wall. What do we do? How do we help these people? They're resisting the education rate from the beginning. And then I had one night, one of my children was not sleeping. I was in their room. I had my phone and I was doing some research. And I thought to myself, people are really missing an opportunity here. If you're going to stay in your house and you're going to have access to equity overnight, and you're going to have access to low rates, lower than your current mortgage rate, or even if they're the same, but you can take out more and the penalty's not going to kill you. What an opportunity right now. The market is abnormal. We have a natural disaster in COVID. We have low rates, and for some reason, a purchase frenzy. This has created this perfect storm for the average homeowner to become a more financially savvy and have access to money at a rate they have never been able to borrow before. So why not take the opportunity? The trust factor is big, Vlad. You have to be able to connect with somebody, and that homeowner who's hearing that conversation for the first time, hang up and say, it's crazy. I never thought of doing this before. So we are very patient in that, trying to, spark your interest and do the what ifs. What if I could give you money at 1.89? What would you do with it? And those conversations have been really exciting, and they have helped drive business during COVID on homeowners who otherwise have just said, no, I'm not interested. I don't want anything.
And I'm really not surprised that you're able to have those deep conversations, because the reason we say I don't need anything, or the reason we even say the words no, it's not because we actually don't need anything. It's just because it gives us a sense of control, right? And a sense of, if you're going to come at me with some sort of an offer, but wait, I already said I don't need anything. So it's going to give me time to process whatever it is that you're going to tell me. And it actually puts me in a better position to listen to what you have to say and be receptive to it once I've put that barrier to say, hey, I actually don't need anything.
I think that is a mindset shift that we work on here, especially with new agents who pick up the phone and are afraid right away to hear no, or think that I just want the best rate. I don't need anything. I don't own any credit cards. Well, if you didn't own any credit cards, you wouldn't have a credit score. So those are just those barriers that I liken to, listen, guys, I buy suits. And if I go into a suit store and I don't want to be bothered right now, what do I say? I'm just looking. But I'm only in a suit store.
Right.
So obviously I'm looking for suits. Right. And it's that salesperson or that guide who can say, I had a great experience recently in a suit store before COVID where the guy simply said, no problem, step back, and then came to me and said, you're wearing this particular suit. This is a nice compliment. And that started the ball rolling, because it wasn't, well, did you know we have a sale right now? And rate in this industry, we are so focused on, hey, did you know the rates are really low? Or do you qualify for this rate? Where I try and rein back our people and say, you're going to get no, you're going to hear those protection phrases, work with them. You want to know what the lowest rate is? No problem. We're going to get that. Let's cover some basic questions. And we try and build that momentum to find out how we actually can help. And again, I want the suit, but I'm going to put that front in place. And it's really the good communicator, the person who's a good guide, the person who doesn't get put off by somebody, with those pre-programmed barriers that you learn as a child, your belief system, what to say and how to protect yourself. It's those people that we look for here at Nuborrow, that we nurture and grow, and that we want a team of people who are expert guides, regardless of the opening lines on a call.
And that's how you put your customers at the forefront and set them up for success, right? And that's, I think, is the formula to your company growth as well. So, Adam, you clearly have a very unique and novel approach to not only how you treat your customers, but also how you lead your team. Thank you once again for taking the time to speak with me, sharing your expertise, answering these questions. I wish you the best of luck and hope you have a great rest of the day.
All right. Thank you. It was my pleasure.